Hey everyone, in this video, I'm going to take a look at Facebook stock, or as it's now called, Meta Platforms, and I'm going to do a basic intrinsic value analysis using a discounted cash flow model. There's been a ton of talk since Facebook a few months ago made their announcement that they were shifting their focus to the Metaverse, whatever that actually entails, we'll see. But they're planning on investing quite a bit of money into this venture, so whether it pans out or not will be a big factor in Facebook's future. We'll get to that in a second. But for now, let's take a quick look at Facebook stock. It's actually up 10 or 11% over the last year, at least as of filming this. We'll see what happens by the time this posts, since the markets are pretty volatile right now. We can actually see the year-to-date view, and it's actually down 10% to start the year. So even with that, they're still up on the 52-week view, and then 3-year view, they've done fantastic. They're up 100% over the last 3 years, and they've been one of the darlings of the tech stock world. This puts them at about an $800 billion market cap, or $839 billion to be more precise. We can take a look at this summary right here. Meta Platforms Incorporated develops products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide. And we're including Facebook in here, Instagram, WhatsApp, and any other acquisitions they might make in the future. We also have the Facebook Reality Labs segment, which includes things like the Oculus Rift. And this is probably going to be a big engine for their metaverse projects and trying to get more virtual reality, augmented reality type applications and products involved. And of course, the company was formerly known as Facebook Incorporated and changed its name to Meta Platforms Incorporated when its extremely charismatic and not robot CEO Mark Zuckerberg came out and announced the change. Anyways, let's take a quick look at the company balance sheet. That's usually where I like to start when I'm looking at stocks. So we'll take a look here at their cash position. They have about $15 or $14.5 billion in cash, then short-term investments at about almost $44 billion. And when you put those together, that totals about $58 billion in cash and short-term investments. We scroll on down to their liabilities. We can take a look at long-term debt. And hey, look at that. They don't have any, which is a nice place to start. They do have some pretty significant lease obligations, I'm guessing, for their offices. I don't really know what else. Oh, I guess data centers as well, perhaps. So that would be sitting at $12 billion, so significant relative to their cash position. But in total, that puts them at about $18 billion in non-current liabilities, so longer-term debt between this other non-current liabilities category and then the capital leases. Add those together, you're looking at about $18 billion right now, which relative to their cash position doesn't seem like it's all that much of a concern. Hey guys, real quick, as a reminder, you can go ahead and check out the affiliate links in the description below. You can get some free stocks with Webull and Robinhood if you open up accounts with them. I get some free stocks as well, so it's a win-win. You might as well go check it out. It's free money.
It's free real estate.
Let's keep on scrolling down to total shares outstanding, and it looks like we have seen some very minor share buybacks over the last couple of years. Looks like back in 2016, they had about almost 2.9 billion shares outstanding, and now they have 2.7 or closer to 2.8 billion shares. So some decent share buybacks, but nothing to write home about. But it is nice to see that they're not diluting shareholders. This is where the company will issue new shares in an effort to raise money. And when you do that, that causes all of the outstanding shares to become worth less, in that each individual share now has a smaller ownership percentage of the business and all of its profits. I like to think of it as inflation, but with shares. So dilution has not been a problem for Facebook. Let's go ahead and take a quick look at their revenues. So we go to the income statement, see their total revenues, and boy, the top line has been growing pretty significantly over the last few years, though it has started to slow, it seems. We're at $86 billion in revenue. This was in 2020. And if we look at the last 12 months, they're actually at over $110 billion in revenues. And that would imply about a 30% increase in revenues between 20 to 2021. So very significant. And we've seen anywhere from 50% revenue growth year over year down all the way to about 20%, but it's stayed over 20% for the last few years and has been really just significant growth across the board. But what good is revenue growth if you can't grow cash flow? So we'll take a look at the cash flow statement now, and we'll take a look at their free cash flow, which is done by taking cash from operations minus this number right here, capital expenditures. So this is money that they're reinvesting back into the business. So you can see that this number has been growing pretty significantly as well. And as of about 2020, they had about $21 billion in free cash flow. And looking at the last 12 months, we're looking at about $36 billion in free cash flow. And do note that capital expenditures have been continuing to increase. And if we switch to a quarterly view to see more recent data, we can see that capital expenditures have continued to increase. Meanwhile, cash from operations have as well. But overall, the trend is positive for both numbers. So now we have a better idea of the starting point we're working with here with Facebook. So what does the future hold? Obviously, that that's what any investor is really going to care about. What is the future going to hold for a company? What is the most likely outcome for something to happen? Obviously, that's up for every individual investor to decide, but let's try and figure out what might be ahead for Facebook. Well, for one, they've already made it very clear that they're planning on spending a lot of money towards this new Metaverse project, and whatever that actually will entail, we'll see. But anyways, they said that they're already investing about $10 billion into the Metaverse venture, and I'm sure they'll keep investing many more billions on top of this as they try to build out whatever their scheme is. And there's no guarantee that this will pan out in any way. After all, we don't even really know what we're talking about here. Are we talking about a metaverse where people can just basically meet in virtual meeting rooms and hang out? Or is it something deeper than that? Is it like its own thriving internal video game-like economy? What are we talking about here? So it's a little bit unclear where this might go. And I guess that's part of the exciting part. That's also part of the risk. And there's also a chance that it completely flops and doesn't turn into anything. But even if Facebook itself isn't the big leader in metaverse technology, they do have a significant exposure to it through things like Oculus Rift and virtual reality products. This is more on the hardware side, which definitely is more expensive to scale than something like software. But anyways, we can see this article back from 2017 from CNBC. It says that Facebook's $2 billion bet on virtual reality looks like one of Mark Zuckerberg's rare mistakes. So they were already poo-pooing the investment they made into Oculus, which are these headsets right here. And they've developed new products since then. But all of a sudden, it looks like this investment might have some serious additional values, especially as more people look for more virtual reality type products, and also as internet speeds across the world increase so that you can download more intense graphical things that maybe would be used in a VR headset. There are lots of different things that could feed into this sort of business beyond just Facebook owning the metaverse and everyone goes through that. There are other ways that Facebook can benefit from the expansion of virtual reality and that sort of thing. The hardest, if not the impossible part, is figuring out how big this market really will be. And even if this is a big market, there's probably going to be quite a bit of competition flooding money into it. So the metaverse stuff is kind of hard to pinpoint what it's actually going to look like, but what about the existing business that's really been propelled by advertising revenue through things like Facebook and the true ads engine that Facebook has created and has thrived on over the past however many years? There's definitely been a lot of pushback against Facebook and big tech in general for their use of personal data in tailoring different ads and different products to people. And this includes companies like Apple, who sell the phones that often have Facebook or those sorts of apps installed on them. There are different privacy policy moves that Apple has made and can make in the future to hurt Facebook's ability to collect data that could be used to tailor better ads. And there's also the top-down regulatory concern that the government might come in with harsher privacy regulations that would hurt companies like Facebook. But then again, if every data-oriented company is hurt by this sort of thing, then the relative status of each company shouldn't be all that unchanged. That is, Facebook might still be the best in something, it's just now the best is slightly worse because of the top-down controls or regulatory concerns. It doesn't mean profits won't get hurt, but it also doesn't mean that the company will suddenly be destroyed by competition because all the competition is hurt by the same thing too. But speaking of Facebook ads, probably the number one thing that influences the effectiveness of Facebook ads is the massive user base that apps like Facebook and Instagram have driven to the platform. This is the number of monthly active Facebook users worldwide as of the third quarter of 2021. And this is in millions. And really, we get the mind-boggling numbers today at 3 billion monthly active users on Facebook. Sure, some of this might be thrown off by things like bot accounts that might be getting counted here or double counted accounts. But in any event, there is a massive number of users on platforms like Facebook and Instagram that Facebook can monetize. The more people that Facebook has to advertise to, the more it can potentially tailor ads to different types of people. So it is a very powerful thing to have this sort of audience, if you will, for an ads platform. My question would be, how much more can this really grow? We're already at 3 billion people, but if we're looking at a total addressable market, if every single person in the world was on Facebook, that's 7 to 8 billion people. Could Facebook get to that? I guess sure, but how likely is that? How much more growth can they really squeeze out of the entire world population? The growth rate in users remains tremendous, so it could keep going for a while from here, but just remember there is a top line cap here in how many users they can possibly have. Now, adding a whole new product line with something like the metaverse could greatly expand the profitability per user, but it's a risk. There's a chance that it doesn't pan out and it doesn't work, and you just waste all this money on trying to build a platform that doesn't actually work. So let's go ahead and put together a discounted cash flow model for Facebook to try and figure out an intrinsic value for its stock. This is one method you could try to use to value stock, though do realize that we're trying to tell the future here, so there's always a chance that things aren't going to work out. But I'll walk through the assumptions that I've made in this analysis right here. So for years 1 through 5, I decided to use a growth rate of 15% in their annual cash flows. And that is a significant growth rate, though it's actually quite a bit lower than what they've been doing. And this is the hardest part for me for figuring out how to value Facebook. It's what is their growth rate really going to be? They're already huge. So once you get to a certain point, it can be very hard to grow cash flows any further because you've already reached such a huge, gigantic market and you've gotten as much as you can out of it. Or at least it becomes much harder to get more out of it. And we'll see if that's actually the case with Facebook. So I don't really know what growth rate to peg on the company for especially the next 10 years. Who knows where they're going to be 10 years from now. So I did 15% for years 1 through 5, which is still significant, and 8% for years 6 through 10, which you could argue that both of these numbers are way too conservative. You could also argue that they're both way too aggressive. So it's totally up for you to decide. I use a discount rate of 15%, which is sort of like your minimum required return when you're doing a discounted cash flow. So I use that, which should be well above market returns if we're looking at history, though again, we'll see what the future actually holds. And then I'm using a terminal multiple of 15, which would multiply the year 10 multiple in this case by 15 to get sort of the ending value of the business as a whole. I'm using $35 billion in free cash flow as the year 0 cash flow because this looks to their last 12 months. So I'm just using that as the initial input. And then I took their current cash and short-term investments minus all of their liabilities, so both current and long-term debt. And that gets me an excess capital number of $21 billion as a starting point. This gets added on to the value at the end because it's not really cash flow, but it is cash that you technically could liquidate if the company were to just suddenly dissolve today. So we grow our free cash flows over here in column F by the growth rate that we've assigned given the year. And then the terminal value here is calculated by taking this year 10 cash flow, multiplying it by our terminal value. That's the terminal value here. Then we discount all of those numbers appropriately by our discount rate of 15%. We add up all those discounted cash flows to get us a present value of future cash flows of $704 billion. We add on the excess cash here, and that gets us an intrinsic value based on these assumptions of $725 billion, which is a bit below their current market cap of $839 billion, which would imply a margin of danger of 14% as opposed to a margin of safety where you'd have a sort of cushion there. Now, again, I'm not saying that this will happen necessarily. There are lots of different things that could happen. We're looking at a 10-year analysis. A lot can change here, but let's take a look at what this would imply. At the end of year 10, we're looking at about $100 billion in free cash flow, which is actually more than what Apple has today. And they're a cash flow machine with something like $90 billion in free cash flow. So could Facebook get to that size by the end of 10 years? Seems like they could, but let's say you drive up these growth rates in a huge way and you think they're going to maintain more of their current pace. We'll just call it 30% per year for the next 5 years. And we'll keep the growth rate here for years 6 through 10 at 8%. All of a sudden now at the end of 10 years, you're looking at $190 billion in free cash flow. So more than twice the size of Apple on a free cash flow basis. And that would imply that Facebook is a fantastic deal right now, given these assumptions. But the loftier the assumptions, the more that needs to go right for those assumptions to come true. So I'll go ahead and put this back down to 15% for the first 5 years. So at these numbers, I personally am not going to be investing in Facebook yet. Though it is getting very close to what I'd consider a buy target for my own portfolio personally. What your buy target might be extremely different. You might not even be investing for the long term, in which case, thank you for sticking around anyways. But if you're looking to trade and make money in the short term, you're probably not going to care much about these sorts of things. And you're looking at different sorts of metrics. Even with reasonable assumptions, there's always a chance that things won't pan out. So I'm trying to make sure that I'm conservative enough for my own risk tolerance to where I'm comfortable making that investment and I'm comfortable enough to hold it for the long term if things go at least close to right. And the bigger the discount you get relative to your assumptions, the more room for error you have. So ideally, you want to get a really great price, even with conservative assumptions, which obviously doesn't always happen. So right now, I'm not going to be buying into Facebook, though it is getting pretty close to where I would want it to be for me to open up a position. While there is some serious risk with the Metaverse sort of shift and the money that they're pouring into it, relative to their cash flows, it really isn't all that bad. Let's say they put a whole year of cash flows in. That's $35 billion at today's numbers. Their $10 billion initial investment into this project could be replaced in just a few months of free cash flow at their current rate. So it's not as though this is the life or death of the business, at least anytime soon.
Senator, we run ads.
But I'm still trying to get what I personally believe is a really good deal in the company, and I just don't think it's there yet. It doesn't mean that you shouldn't buy it because your assumptions, your risk tolerance might be different than my own. And if you need help with your own portfolio, definitely go speak with a licensed financial professional because I am not one of those. Anyways, if you guys like this video, definitely like it since that would help the channel out a lot. And if you want to see more content about investing and personal finance, then definitely subscribe since I put out new videos every single week and would want you guys to miss out. And check out the free stuff from the affiliate links in the description below. But until next time, take care.